Okay, hi there and welcome to an A-level business economics video. And in this quick video we're going to take a look at the key question, the interesting question about whether Uber will ever make a profit. This is a fascinating question for business economists. Uber, of course, is a ubiquitous brand in many cities around the world. Many students of economics will actually will have the Uber app on their iPhones and smartphones and make regular use of Uber. Here's the mission statement of the business when they floated on the US stock market just a few months ago. And Uber's aim is to ignite opportunity by setting the world in motion. However, according to the latest data through to the end of 2018, Uber's total accumulated losses now amount to over $12 billion. Take a look at this chart. It clearly shows the business is becoming more successful by growing its revenue. That's shown in blue. According when they launched on the stock market, they had over 91 million monthly active users, and that figure no doubt has gone up since. The business as a whole, if you include Uber Eats meal deliveries, had revenues in excess of $50 billion in 2018. That was up from $34 billion in 2017. But of course, they pay more than $40 billion to drivers and restaurants, so their actual cut is a lot smaller than that. And they had a net revenue after those payments of just over $11 billion, as you can see in 2018. However, their total operating costs, their total costs and expenses, that's things like sales and marketing costs, research and development spending, administrative costs, network charges, hosting of servers, for example, that was $14.3 billion. So the business, despite growing their revenue substantially, the operating loss widened to $3 billion in 2018. So Uber is a great example to use of a fast-growing company, a successful business in many ways, scaling up remarkably quickly, but whose losses continue to mount. Now, the key question is whether that's going to continue for Uber, or will it become something like an Amazon, which eventually has become highly profitable. This is the front page of the filing to the United States Securities and Exchange Commission when Uber launched on the stock market. And let's have a little look at how Uber's IPO, or initial public offering, valuation measured up. This is absolutely fascinating. The business had a market value of over $82 billion when it finally floated on the US stock market. That's more than 3 times the valuation of Snap when it floated in 2017, well over 3 times the valuation of Google, which floated in 2014. And you can see that other businesses have had a bigger market valuation, Facebook and Alibaba, but Uber is right up there. A business valued at over $80 billion, although not now, which makes in cumulative terms over $12 billion of losses. Uber's main rival in the States, if you take sort of US perspective, is Lyft, another major ride-hailing business, and you can see here the relative position. Uber well ahead in terms of gross bookings and revenues, but actually earnings before interest, EBITDA, earnings before interest, tax, depreciation and amortization, actually bigger for Uber than Lyft. Uber, on that basis, losing $2 billion a year. Part of the problem for Uber has been it's become difficult to break in substantially to a large number of European markets. The competition regulators certainly have their eyes on Google and Uber and Facebook and lots of other digital businesses inside the European Union. Take a look at this chart. In 2018, nearly 4 million people in the UK had downloaded the Uber app, over 3 million in Russia, and sizable numbers in France and Turkey. But then it tails off quite sharply, less than 1 million in Germany, well less than 500,000 in countries like Switzerland and Austria, etc. 37,000 Hungarians have downloaded the Uber app. So for Uber's European ambitions in terms of expansion, it's become particularly tricky. Perhaps they need to look to other parts of the world. Uber is widely known and respected, I suppose, as being a disruptive influence in the taxi market. And I think this chart really sums that up. On the left-hand side in yellow, you have the number of yearly taxi pickups for the yellow taxis in New York City. And typically that figure has ranged between 170 and 175 million per year, well over 3 million per week. But look what's happened since Uber arrived in the market in 2014. Uber's growth has been substantial. The decline in the number of taxi hails for yellow cabs has accelerated, and in 2017 Uber overtook the yellow taxis. The industry seems to have got bigger in terms of total size, but Uber is clearly a disruptive force. And you can see some of the investment that's been made in Uber. So one of the aspects of fast-growing companies which are loss-making is that shareholders in the business need to have pretty deep pockets before a profit arrives. So overall, as of January 2019, the total investment, equity investment in Uber, has been $24 billion. Didi and Grab and Lyft also receiving significant funds, but Uber is way out there. That is a huge investment. The investors have had to have deep pockets. Uber is successful. If you look at the metric of global gross booking volumes from 2016 through to the final quarter of 2018, you can see the progress here in terms of the value in billions of dollars. This is a substantial growing business, but it's making heavy losses. One reason, by the way, is that as you have more activity, more output, you have to pay more insurance, for example, in providing those services. Now, this chart is critical from a business perspective, because essentially what's been happening is that Uber's been losing money at an incredible rate. And the net losses posted are certainly staggering at times. The net cash used is the key thing here in blue. Essentially what this chart shows is that Uber is draining cash. It's got a negative cash flow in terms of net cash used in operating activities, and significantly it's draining cash by $1.5 billion a year, and therefore it needs to keep going back to the investors, keep going back to the markets to boost its cash reserves. It's not a business with necessarily a lot of capital. This is a statement of Uber's property and equipment assets in 2018. And okay, they've got computer equipment and they've got construction in progress and they've got some lease computer equipment, etc., and a little bit of land. But actually, this is a business, I'm sure you're aware of this, which actually has a relatively little capital. There's a great new book out by Jonathan Haskell called Capitalism Without Capital, which explains how a lot of these businesses, such as Uber and companies like Airbnb and Netflix and Facebook and what have you, are businesses which actually don't have a lot of capital invested in terms of physical investments, but they're network businesses and platform businesses able to grow very quickly. Very different business to something like Shell or Tesco or a major car maker, for example. Typically they have much more capital in the business. So will Uber ever make a profit? Well, some people think that it will. Some people think that Uber will become a profitable business very similar to Amazon. Amazon, of course, has diversified over the years. Amazon Prime, Amazon Web Services, now a hugely profitable part of their business. And we also start to see this with Uber, not just the ride-hailing businesses, but of course Uber Eats is now a significant competitor in many towns and cities in Europe and the United States. And one to look out for is the rise of Uber Freight, which again is trying to disrupt the freight industry, the logistics sector in the States and other countries. Perhaps diversification will be really key to growing the revenues sufficiently large so that they can turn an operating loss into an operating profit. Well, I think Uber is a really interesting business to study, and I think from a micro point of view, I would always encourage my students to find 3 or 4 businesses that they're particularly interested in, and if you like, try to become a mini expert on some of the stories and the economics that surround it. So perhaps Uber will be one of your choices in the year ahead, and if it is, I hope this video has been of some use. Thank you.